What's up, everybody? Welcome to Blood, Sweat, and Balance Sheets. My name is Mike Whitmire. I'm the co-founder, CEO of FloQast, inactive CPA as well. Excited to welcome you to Blood, Sweat, and Balance Sheets, where I get to talk about whatever I want. Today, we brought our Chief Accounting Operations Evangelist. Is that?
Yeah, I'll take
did I just make up chief? Did I just?
Yeah, I think I just got a promotion.
Okay.
Hell yeah.
We'll chat about that later. We'll see what Addy from HR has to say about my mistake on a podcast. But excited to chat with you today, man. Looks like we're going to be doing some 2024 predictions.
Yeah, that's the plan. Just kind of see what's going to happen going into next year and what's going to go on with the industry, So, if people want to make some long Vegas bets, I think you drive out there and see if they'll take it. But I wouldn't.
Over under on generative AI existing in ERPs by end of 24. Okay.
Yeah. So the first one we really want to tackle here is what do we think is just going to happen for the profession and the professionals. So what's going on with the workplace, careers, stuff like that. And I think the big thing that has been almost an evergreen piece at this point since the pandemic started was the talent struggle and how it's getting worse and worse and worse. And more sources of data are coming out and saying, accountants are leaving the field. And it's not just people that are meant to retire, that it's, natural attrition out of the field, which we always expect. But I just saw Robert Half the other day posted that a surprising amount from the 18 to 35, so new professional range are just like, I'm dipping.
Yeah,
I'm done with this.
No, it's concerning to see that trend continue, and we talk about it all the time at FloQast, right? It was actually about a month ago. I was talking to someone. I was like, I don't know if I'm just buying my own stuff. Like now I'm at a point where are we the ones who push this narrative, or like is everyone like what's going on right now? And then I was like, no, you look at the data, and this is a really big problem, and actually everyone's talking about it now. So I'm glad it's like very well known. But what's going to stop it? Why it's going to continue in 2024? I don't see any forcing function for it changing.
I think that the tone of those in power, right? So your executives, your partners, and stuff like that really get to decide these, especially these young careers. Perhaps they don't understand, or they're just not taking into consideration what these new professionals want. Me personally, I think it's more of a failed promise of the profession that's been going on since 20 years ago, where it used to be when you started in accounting, if you remember back to when you probably got in your accounting program, where they're like, oh yeah, you're going to control this within the organization, you're going to drive change. It's a hell of a career that provides X, Y, and Z, all the benefits, all the money, all the potential. You're going to golf all you want in the summer, and then you get in it, and you're like, oh my gosh, you just sold me like a battleground. Like I got in here, and it's like I'm in the trenches. Yeah. No one mentioned anything about this, and I just think that the younger generations just see it for what it is and are saying, yeah, this isn't for me. And I think that there's a bit of a disconnect personally, and I'd love to get your take on this. People, I remember this being super frustrating when I was in public accounting, but you're sitting there, you're doing really hard work, and a partner's like, why is this taking you so long? Why is this so difficult? What's going on here? But this is coming from someone that, had a much less complex business environment that they were operating through. They were probably doing pre-SOX audits, right? Which is a huge thing. The SEC wasn't trying to trophy hunt and find these guys. And they didn't really have to use the technology that, and we've seen this in some of our surveys, a lot of that audit supporting technology and a lot of the technology our clients were using was not easy to use. You had to work around it to try and get it to do the thing instead of just getting like a spreadsheet. Even if it's on paper, you're like, well, I can recalc this and know if it's right or not. And it's a vastly different career, I think, than it was 20, 25 years ago. So I don't know.
I agree. I mean, I think part of why is this taking so long is auditing gets harder for a given client. The audit gets harder if the company's changing, whether that's like they're becoming bigger, scaling more entities, or if they're changing systems, implementing new guidance, they have to comply with all that good stuff. Like the easiest audit is the repeatable audit. Just roll forward last year, same as last year, update the tick marks, let's move on with our lives. But if they integrate a new system, that comes into scope for controls and compliance. You got to audit that. You're figuring out what to do in the first year. How can you predict how many hours it's going to take me to figure out how this new tool interacts with this and test it and try to figure out how to recalc it? So just like business has gotten more complex and changes more, and that makes audits harder. And if you're a partner who was going through things when maybe they weren't changing as much, it's just rolling it forward. What the hell's so hard about this? Like, yeah, it's a disconnect. You got to be in the weeds to really feel it, right? That's the problem. Is you can't be. I heard a great quote recently. Is like the people up here are the ones with all the power and none of the knowledge, and then the people doing the work have none of the power and all the knowledge, and it just the disconnect is really, really unhealthy.
Yeah, and I think it goes back to, and you see the same thing with CFOs, and whether they have an accounting background, a finance background. When they were working in systems, it was probably a lot cleaner sales order. The revenue recognition was probably a lot more lenient and straightforward.
Yeah.
Lease recognition, whatever it is. Even the way you do stock comp and everything, like all that has changed over the last 20, 25 years. And so if they are, when they were in, not to discount what they went through, but it's not the same anymore. It's a lot harder at a base level than it was 20, 25 years ago, which is good. I mean, if business is stale and stagnant, you're out. You'll die. You won't survive in a marketplace. So you need to be changing, but it's just making sure that, how do you as a leader stay relevant to that? And I think what we're seeing in the industry is that they haven't. By and large, they haven't. And so now we have this big issue where people are just like, well, then there's other careers I can go after, which one of the reasons I like to work at FloQast is you want to shift that paradigm. You don't think it should be that way, and I don't think it should be that way either. And so what's going to happen in 2024? Well, I think, and it sounds like you agree, a lot of that's going to continue where people want to go to greener pastures because they see friends being successful as a software engineer, which is, might seem different, but a lot of the critical skill sets can be like surprisingly transferable, right?
Yep,
And we've seen that here at FloQast. Or they want to maybe not even just leave, it's not a big jump from accounting, but they go straight into finance. Like how many accountants do you see immediately try and get into the finance side of the house?
Totally. So fast.
Yeah. So
it's kind of the beauty and the curse of accounting. Like you learn so much about business that you're kind of dangerous in many different areas of a company, and you can go be helpful there. You have that kind of mind for going into software engineering as well. And then you don't enjoy the actual work you're doing, so you pick your head up and think, oh, I can do this other stuff, which is true because you can. And we've seen people be really successful doing it. And let's just go back to also, our accountants getting paid enough?
Yeah.
At the end of the day, people go to work to get paid. That's a big part of why they go to work. And if it's just a matter of like, we're not paying enough in the space, maybe there's a pretty quick fix too, not getting people to leave. And I think kids in college today are a lot more sensitive to running the calculation around how much student debt am I going to take on? What's that going to cost me? Am I making enough money to pay for that? Because there's enough knowledge now of like, hey, student loan debt can be really crushing for you. And so when you run the numbers out in a field where the salary has not been going up inflation adjusted, the math gets real hard. Like when we were making this decision, right, it was like one of the areas with the highest job security and one of the higher compensated roles. And that has not kept up with other professions, which we talked about on the FinTech Flow, I think a few weeks ago, just like how inflation adjusted accounting salaries are actually down over the last 10 years.
Yeah.
What the hell?
Yeah. It's wild. And the work is harder and there's more of it. And so, you look at these teams and you look at people like, hey, we can't hire. And it's like, who do you think was going to take that?
Yeah, totally. Pay more and maybe change the profile. And I think part of this also is I had a really interesting lunch today with a former CFO, and he was saying that his mode around how much to pay accountants was he wanted to set an example for the rest of the company that you can be cheap and run an efficient organization. And so he viewed himself almost like a martyr. Like I have to keep salaries low and not pay a lot so that I can set an example for the rest of the company. I'm like, dude, that doesn't ultimately set an example for the rest of the company. Like they're still going to, pay fair market value for what's going on. And the reality in accounting is the fair market value is higher than people are being paid today because people are leaving the profession for other pastures. So like you got to pay more. The fair market value is higher. So anyway, and ran on compensation. I feel like there's actually a rather quick fix too. The problem of people exiting the industry, getting them to major in it, maybe that's another longer term challenge we have to deal with.
Well, and I think, to that salary point, that investment, I think, is a big thing that, we'll probably even talk about when we get into the predictions around technology. But there are so many CFOs that martyrdom, right? It's like ingrained into us for some reason as accountants that we got to be cheap. We got to be, we have a fiduciary responsibility to be fiscally responsible. It's just like, oh, whoa, like we gotta run the business, and you can't really make money without spending money to a degree. That old adage is true in a lot of ways. And, I think that's one of the things that is also pushing accountants out is they're not getting supported in the tools, right? They're not getting supported in what they use. And so they want to leave. And again, we have a survey that we've done internally at FloQast that we'll talk in another podcast about that shows that if people have bad technology, they're very likely to leave.
Totally.
And even if they have okay technology, they're still pretty likely to leave. And it's not until they have a good relationship with their technology that they're like, okay, maybe maybe this is enough because I think unfortunately it's that they're so afraid of going to something bad. They're like, I'm going to stay where it's nice.
There is, yeah, the grass isn't always greener. That
Exactly.
is a very true thing. And I think like the whole idea of majoring in this field to have a bigger opportunity in the future is like, it's very true. And it's hard to get around that. One of the things I've noticed is like when we first started FloQast, it was a lot more difficult to get CFOs and controllers to open up the purse strings to buy software. Even back then, in 8 years of selling FloQast, that has become a lot easier. And it started really because, hey, we need to be efficient so I don't have to hire as many people. So the budget opened up on software to do that. I think the budget, ultimately there is a pinch point and the budget's going to open up for paying people more when it's like, okay, no, we have enough software. Like this is as small as a team can get. And now I don't have enough people to even do that work. Like I have to pay more. So there's a forcing function coming at some point here. And whichever CFOs adjust to it quickly are actually going to be able to build out the best teams and have the best, crew and keep them together and have that consistency is really important for building a great function.
And I think that's what, when you listen into different investor calls, you'll hear CFOs talk about how like talent retention is so key and building their teams is so key, and that they're really worried about that from their technical accounting side. They're like, how do we get the right people in here?
Yeah.
But what's funny is that it's just like, to that point, that obvious thing of like, well, you can pay him to stay, just hasn't seemed to, that just hasn't, it's like watching someone that, has diabetes and they're like, man, I just can't get over this diabetes, and they're eating a donut in front of you. And you're just like, I can think of something that might help, it's like, I'm no doctor and we all have our struggles and I'm probably more on that side than anybody. And even I'm just like, yeah, maybe I wouldn't do that. And it's just like, but it's for whatever reason, it hasn't switched yet. And I do think there's just like this general diminished tolerance capacity within younger generations to just deal with that, because enough people have warned them or they've seen enough that they're like, you know what, someone else has learned this lesson for me. Why would I learn it? Which I think is a great thing, that like, if you can really learn from other people's lessons, then you should.
I think that's the Reddit effect.
Yeah.
The college students can now hop on Reddit and read all about accounting and Big Four and all that good stuff. So yeah, that knowledge is out there.
Yeah. So we'll drive into the next topic here, which is a fairly large one, but a little bit of the public markets, a little bit of the compliance space. But, we want to talk about like IPO predictions, compliance, what's going on with ESG. There's a greater risk of non-compliance due to like lack of strategy. A lot of organizations we're seeing that their compliance programs are being done at the tactical level, not at the strategic level. But even then, I think what people are probably most interested in is what's going on with the markets from an IPO sense. And I think there's a lot to unpack here. So I'll just give out a couple teasers for you. But I think people thought there would be a lot more significant M&A activity in 2023, which didn't happen. I think that lack of activity kind of shows that buyers probably wanted deals that were closer to like pre-2014 deals, right? When it was like everything was heavily devalued. And then I think sellers wanted post-2019 deals. So they just couldn't meet. There was an impasse as, hey, and you've probably seen this from your angle as a CEO, but, there's no way to bridge that gap. It was just too wide for people to have that activity. And there was enough money in the bank still to where they didn't have to maybe grab on that. And we're also seeing, and this is my perspective, so talking as if I'm an economist or a banker, and I'm clearly not. So, you can probably just throw what I'm saying out the window. But we had a couple bank failures this last year, right? And when that happens, regulators get really focused and banks get really tight with what they're doing. And so I think when you look at underwriting and actually supporting some of these deals to go through, you probably have higher hurdle rates and a little bit more reluctance or, a higher threshold before people are willing to even support an IPO, which is going to be a whole nother thing that slows that IPO market down. But I was reading that Yahoo Finance thinks that roughly 1,200 companies are going to run out of money in 2024. So, we should start seeing an uptick in deals. So do you think that's going to be a boon for M&A? Do you think that's going to be, IPOs will maybe, at least in some verticals, start happening again?
Yeah. So I think your assessment of the M&A landscape for 23 was like spot on. So many companies raised so much money in 21. You look at some of these like a $400 million round, $600 million round, and they're just sitting in the bank. And then when rates go up, here's an interesting thought. all of a sudden their interest income is massive. If you got 600 million sitting on your balance sheet, the interest income, what if you're at 5%, that's $30 million a year in interest income that you're just raking in. That's pretty great. So they're in a really good position to not have to sell, clean things up, move towards profitability and move on from there. So exactly, like you nailed it. That's exactly what's happening. We've looked at acquiring companies. Companies have tried to buy us in the meantime, and it's just like it's like, no, why would I do this? I have so much money. Like why? Like we're fine.
Yeah.
So like people are thinking that everyone's got to bleed out really before it becomes an acute pain. And the other thing is, if you talk to investors, they're like, yeah, a lot of these like first-time founders don't get it, and a lot of them they haven't lived through this before, and so they're like irrational and naive and think it's all going to turn around. They're going to be fine. So I think 2024 is going to be the year where it all comes to a head. Like I do agree with a lot of M&A going down in 2024. I think it'll be held back by interest rates though, because a lot of M&A is done with debt layered on top of it. And so if rates are as high as they are right now, how do you get those deals done at a good valuation? You probably don't. They're a lower price, or they're like big equity deals. Maybe public companies start acquiring smaller companies with a little bit of cash, big equity grant, and give the founder something to stick around. That might be the approach for it. And then if the IPO window comes back, which in my opinion, the first quarter interest rates get cut, it's going to be ripping after that. That's
we'll see what Powell does.
Yeah. Well, I think, all right, here's my humble opinion. Powell's going to get pressure to drop them in roughly that Q2, Q3 timeframe so that the stock market rips ahead of the election.
100%.
So if I had to predict when the IPO market's going to be good, it's going to be back half of 2024.
Yeah, and I think that's a lot of what I'm estimating happening out there is that you're going to see the larger public entities that already have a lot of cash in the bank that haven't seen a good deal to buy on, all of a sudden say, well, we didn't really want to do any kind of distribution because maybe that's not a tone they want to set with their investors, and so they're looking eagerly to buy something, but they got to make sure it's at a good deal. And so, I think those guys are going to come in and take the lion's share of the M&A deals in 2024. Which that opens up the fundraising market again in general. But what I'm seeing out there, you talk to bankers and VCs and everything, it's like a big separation between winners and losers in this market. Yeah.
You're going to have to be really good to raise money. So it's not like rates coming down. That doesn't mean that all the VCs funds are all of a sudden much bigger immediately. They have to go raise money from LPs, get their thing. So it's not like the VC market's going to be boom open.
Yep.
IPO window will open very quickly.
Yeah.
VC market's not going to open as quickly. So I think if you're a big public company, here's how I'd be thinking about it. All right, I have Q4, Q1, and Q2 to pounce and try to buy as many companies as cheap of a price as possible before the window opens up and people start ripping again in the back half of the year. So that's my strategy, is to deploy whatever capital I have now or equity to grab the companies that make sense from a strategic perspective, and then watch the stock price go up after that.
Yep. And I think that, the only other thing I think that might help with the IPOs is, and we saw some of this, I wouldn't say it's a huge influence, but I think there's something to be said for already enterprise-sized public companies doing carve-outs in well-performing industries.
Yeah.
They're going to try and capitalize on their vertical, maybe spin off something that's doing well. They're probably going to be pressured by their board to do that, which is then going to let them kind of refocus on what their core
Has
is.
that happened recently? Any examples?
Not recently, but it happened kind of in the last downturn where you saw like a lot of spinoffs, like right at the end, people trying to capitalize on that and then honing in that excess capital from the spinoff on their core organization.
Any predictions? Didn't Zillow spin off that like home buying arm that they had?
I don't remember.
I remember Zillow had this like robo buying
that would not surprise me.
They just bought it based on this estimate, whatever. Whatever that thing was. So that's like a thing where that would make a whole lot of sense for them to spin off something like that. But that's interesting. Yeah, carving out portions of the business and
you saw GE do quite a bit of it when they were, and this is dating me and the industry, but you saw them do quite a bit of it when their investors pushed back on them being a conglomerate. They wanted to focus high in tech and stuff like that and get rid of some of their other traditional arms. Like appliances, banking, stuff like that. But I think there's enterprises out there that have complementary, but maybe not close enough, technology arms that if it's in a good vertical, maybe it's like a healthcare vertical or something that's attached to it, they're going to spin it off and raise that capital, which will then further spur that M&A deals or investment in other areas. So
I'm going to show my age also. Do you like 30 Rock?
Yeah.
Isn't it hilarious how Jack works at GE and oversees microwave, oven, and television programming?
Yes.
Like I find that to be one of my favorite lines. He's like, my title is head of
Yes.
this. Like that's GE right there. Yeah. Perfect.
Yeah. It's you look at some of those like old conglomerates, and it's like it is wild. Like they're like, we own all these things. You're like, but why?
Well, they're synergistic, I guess.
Yeah,
How?
exactly. Yeah.
Accounting does work for all of them.
Yeah, exactly.
That's really where it is.
The hub. We're the hub of the organization.
Yep, totally. All back to accounting. Nice.
All roads. So let's hop then into what we think is going into the compliance space and what we think is happening here.
Yeah, you were talking about strategic compliance versus tactical compliance. What does that mean?
So I think the way I see it is a lot of organizations have their compliance programs at a tactical level. They're trying to check the box and just say, well, I have a regulation that I have to meet. I am simply doing what is necessary to meet that, but I don't look at the regulation as a way to drive value within my organization, which would be at that strategic level. So tactical is I'm checking the box. Strategic is I understand this could drive value if done correctly. Because if we think about SOX, SOX wasn't brought about just to like punish people, despite the fact it did.
Feels like it.
Like it's kind of like when your coach is like run laps and you're just like, did I do something wrong to you today? And they're like, no, I'm trying to condition you. You're like, are you sure you don't just hate me? You know, it's like going back to that.
My baseball coach, you could tell he was pissed when he said, run till I get tired.
Yeah.
That was that. You're like, oh shit.
And he's sitting in a lawn chair.
Yeah, that means I'm going to throw up.
Just going to get it over with. Pull trig now. Yeah. And I think that's, a lot of people forget that SOX didn't come around. SOX came about to help companies prevent big fraudulent things, big control issues, risks within the organization, and help them operate at a higher level. And it was meant to drive to a large degree efficiencies. And that might seem wild because generally regulation is not viewed that way in any part of the industry. But that's what it's for. And we did a survey on this. We'll do it on another podcast. That's really enlightening. But in our compliance survey, we found out that I would say, I think it was like 75% or 76% of organizations found their programs to be more on the tactical side. But what does that tell us? Well, 26% actually said they saw tremendous value within their compliance program. So it's showing that most of us aren't, right? But a non-insignificant amount, I would say a fairly significant amount of a quarter of organizations actually have compliance programs that are strategic and add value within their organization. And this was, we were interviewing people that are, on both sides of the aisle, whether they're compliance professional, who is obviously probably biased in that matter, to CFOs and controllers who are on the other side of that are like, I wish my IA guy would like kind of knock it off, right? And yet they still found that about a quarter of them said, yep, I think my organization it provides value.
This would be, okay, your description of that makes me, I think we should get Eric, our general counsel, to talk about this. So Eric oversees our compliance program and all of that, and he is hyper strategic about it.
Yeah,
it's pretty that like the way you've described it. For example, he's coming to me like, when do we think about SOX compliance? And can we start to, I'm like,
yeah, we don't.
not yet. But
this is triggering. Stop saying that.
Yeah, but he's thinking that way. Yeah, he just happens to touch on the one that triggers me the most. But he's really, and I remember we were at an executive offsite and somebody was talking about, can we launch in Germany or some other geography or whatever? And they're like, are we ready? And Eric goes, I've paved the road before you even think about it. And we're like, we were ready, it was like, we were ready to go. Cause he had already been thinking about like, what are the corporate initiatives? What are we going to be doing? And he was working on like data centers in Germany. He was getting all like thinking that way and everything. So I was like, yeah, now that you say that, I might be worth like an interview with Eric about how he thinks about compliance. And like, he is hyper strategic about it.
Cool. And here's the thing, like general counsel is highly involved in that process. I think accountants, we generally don't think about legal's involvement here, but when you talk about compliance, legal is highly involved in this. And I think, from my perspective, I used to be like, oh, well, the CFO runs compliance because I always think about like financial compliance, FGRC, right? SOX, but compliance is so much broader than that, right? GRC is so much broader than that.
And the way that evolved at FloQast to where compliance is under our general counsel is, so we brought Eric on super early relative to like a lot of other companies. And part of it is, Eric does a lot of the work that a CFO would do if you hired them that early, but I didn't feel like we needed a CFO because I like that work. And so I wanted to keep doing it. So I'm like, let's get a general counsel in here to take care of legal, the operations, HR, compliance, all that good stuff. And then what I noticed is the first compliance that we had, it all related to getting a customer to sign a contract. Do you have a SOC 1? Do you have a SOC 2? Do you have ISO 2700? And Eric's legal, so he's doing all the contracting process, talking through all this, so he gets it all. And then he just knows rules and law and regulation and everything. So it's made perfect sense for him to build out the compliance team. Now I'm thinking, how does that play out when we move into Sarbanes-Oxley? How do you want to structure that and everything? But like so far, what we've had to comply with, it's not a ton of financial compliance. The smaller ones around, like maybe when we had like a debt line, you know, that would be handled by Greg and Razak over in accounting and finance. But like Erica does basically all of it at this point, and it makes a lot of sense to me to have it roll to legal.
Yeah, I think it does, and I think
or not legal, sorry, general counsel.
General counsel.
He has compliance and legal underneath him.
Yeah, and I think, you know, like you said, you do need someone that can read the regulation from, you know, a true, like, what is my legal risk perspective, and give you that feedback. Because, you know, as an accountant, you read legalese, you know, lack for a better term, and you're just like, I don't know.
yeah. Not like what's because Eric has to know how to like reach out to his lawyer buddies and get the feedback and what might happen. What's the actual risk exposure here? And
you know, totally. what are the actual fines? What's the actual judgments and all that kind of stuff? Whereas I'm just like, I don't know. That sounds like I'm going to hell.
This is not good.
Yeah, you know, like I don't know. It just doesn't sound good. I'm not made for prison. Like,
wait, GDPR. If I have it's $40 per illegal contact that's in our CRM. Like, we don't have that much money. It's like, no, that's not actually how it works, but we should be compliant. But you don't need to freak out. So
yeah, and to the point of like he's paving roads before you even get there. You know, as a CFO, your focus isn't, hey, what's the compliance over in Germany? That's not something you really think about. You're thinking about, hey, what do I do strategically to drive value within this organization? How am I supporting that with the right forecast, the right reporting, all that kind of stuff? So, you know, it does make sense. And you should probably get him on here and you know, see what he says.
That'd be cool.
Yeah. And he's going to be like, Mike, it keeps me up at night. That's what he's going to tell you.
Yeah, you're right. that is like, part of it.
I don't sleep.
Yeah. But it'd be fun talking about the strategic side of it and how it really does accelerate business decisions. You know, like
it does.
He'll take kind of a flippant, like, oh yeah, maybe we'll go to Germany or London or Australia or whatever next. And he'll kind of take like a flippant comment made and start looking into it and doing work. And then when we make the full decision as like an executive team, it's like, oh wait, we've already done laid the foundation. And so that gives us 6 months of accelerated timeline. Whereas if we just like hadn't done anything and we're like, let's go to Germany. Okay, now we got to get a data center set up. We need these HR policies in place. Here's how we're going to hire people. We need an entity, all this kind of stuff.
Yeah, what's that entity structure even going to be, right? Are you just using, are you opening your own sales office, or are you trying to, you know, have a reseller out there, right? Like that's a big decision that people don't think about when you have these entities. And then is it rolling up into your US org? Do you have a GmbH? Like where's it going? And like the way you can set up those structures, I mean, I know as accountants and tax accountants, people are supposed to understand like natively how that works. That's a law area.
That's
like
so hard.
You need to be a lawyer, and not just a lawyer. You need to be like a tax lawyer to understand how to set that stuff up. I turn off as soon as they start talking about that stuff.
Yeah, it's a group of people making those calls.
I think one of my favorite things when you look at like M&As, or when you come into an organization, like, hey, this is what the deal is going to be, is when they hand you the entity structure at the end of the day. Like, this is what the new entity is going to be, and you're like, what are all these other entities that are showing up on here?
Yep.
There's like, they're there for a reason. You're like, oh, okay.
Let me chat with your tax attorney.
Yeah, exactly.
Around all this.
Yeah. So the other aspect of compliance, you know, we talked about strategic, tactical on just like how you have your compliance program opened up. But when we look at predictions for 2024, what do we think is going to go on there? So me personally, I look at the tone the SEC set with the 2022 to 2026 strategic plan that they had come out, which was like surprisingly enlightening to me. I really hadn't read one of those before. They're not long, which is nice. I don't think I would have had the tolerance for more pages than it was.
Yeah.
But what I found was, you know, and I think if you just looked at the news, this was apparent, but they definitely set the tone that they plan to do more with regulation and toughen up regulations. And if we think back, you know, this came out in 2022, and if we think about late 2022, 2023, there's been a lot of anecdotal news stories where they've just like really beat up firms, right? And just said, you did this wrong. You had this inappropriate relationship with maybe a Chinese entity, you know, like component auditor, whatever it is. And they've been really beating them up all the way from the Big Four. I mean, I think it was E&Y was fined a ridiculous amount of money relatively, probably within the last 12 months, for people like cheating on an exam. You know,
The ethics exam.
The ethics
Sharing
exam,
answers on the
internal,
ethics
yeah.
exam. Bro, I think that was like 5 years ago, but yeah.
No, I think 5 years ago it might have been KPMG. I think that's when my
You're
firm
right.
got in trouble. So.
You're right.
What I love is like KPMG, EY, Deloitte, all those guys, PwC will like, well, you see what they did? And it's like, just because yours hasn't been in the news cycle for 24 months doesn't mean you didn't do the same thing.
Yep.
So you're just seeing a lot of that come out. So I do think they're doing that. But then the other thing I thought was interesting is
here's my question with that.
Yeah.
How did they do it? Back to the talent shortage.
So that's something they bring up is
What do they say?
is leaning into their talent shortage. So I will hop down to my notes there because it was a little bit interesting. But they kind of said, let's see, where was it? That they want to make investment into their workforce. So they talk about internally, they have similar pain points that other CFOs and everybody does, right? So they're talking about internally, they want to.
You're saying at the SEC.
At the SEC,
Yeah.
they're talking like they have enterprise level issues, right? So they're talking about we need modernizing, automating technology that supports our workforce. Like specifically, that's what they talk about with low total cost of ownership, right? Not in like those exact words, but almost. Like that's not a heavy reread.
So the way to drive efficiency within government organizations is to have a group where people do not want to go work there.
Yeah.
And then they have to figure it out.
then they figure out how to do it efficiently. Exactly. Exactly. And but like so they talk about that. They talk about centralizing like kind of a disparate teams and locations worth of workforce because they're all over the U.S. right with their different offices. And so they talk about how like, hey, we need to centralize our processes, figure out how to work more collaboratively and get together.
We can help.
Dude, it's like they read like a FloQast data sheet on our products, and it's like, yeah, couldn't agree more, SEC. What do you need from us?
Yeah, are they in the database? Let's reach out. Who's cold calling the SEC right now?
Yeah, can I get them on the line? They're like, yeah, tip line, what happened? You're like, yeah, have you heard about FloQast? Like, that's not the way tip line's meant to be. Please don't show up. Start knocking on your door.
All right, for any BDRs who listen to this, if you can get a demo booked with the SEC, bonus coming your way.
Coming your way.
If you happen to listen to this podcast and then do a bonus on
Put
the way.
Put a like on the LinkedIn post, and we will send you a prize. Yeah, just don't do it through the tip line. That was a terrible idea of mine. Eric will fire me for just mentioning that. He was gonna bust down his door at 2 a.m. But they talk about how do they do that with their workforce, and then how to diversify their workforce a little bit more, have more underrepresented or underserved communities, both from an education perspective into the marketplace, but they kind of bring that tone as if they need to do it more internally as well. And I think while a little bit of that is, should we do that from a equity point of view? Yes, but I also think it's that's kind of maybe the only talent pool you have left. Is like you need to bring in underserved populations that you might were maybe not looked at in the past, because you might not have a lot of other people you can. And I don't mean that like they're not worthwhile. It's just that is talent you need to bring in because it is worthwhile talent. And I think they're kind of starting to realize that. So It'll be interesting to see the changes that happen on that, but they specifically mentioned that they need to modernize the SEC and they need to lean more into data and more into what they're doing. So they talk, I think they hint at, in my perspective, using more machine learning to identify when something's going on in the marketplace. And it's like, I think a little bit of that goes to, when people are making trades that are, maybe they should have known about. I think the data is about that, but I think it's also looking at data within organizations to say, hey, are they reporting financially accurately here, or is there something wrong because those numbers don't look right from a management perspective? So are they massaging earnings? Are they massaging something else? So it seems like they want to make that a little bit more robust.
So here's the thought. I hope none of the big four are listening. They're probably not. So PCAOB rolls up to the SEC, right? PCAOB oversees all the audit firms. We have these challenges around, are audit firms independent? Are they not? Is there enough profitability? Where's the field going to go? Is there a problem? It's really like an oligopoly, right? The big four. And so negotiating with them is just kind of all the same stuff. You're getting the same service. Prices are roughly the same. It's sort of like a commodity piece of paper at this point. Is there an argument for centralizing audits and just having audits done by a government body if you're a publicly traded company?
It's hard to say. I
am proposing eliminating big four audit functions, so that's quite the
it's a
move.
Hard take. It's a hard take.
It's a hot take for sure. But, is that the way to get a neutral thought, or am I feeding an inefficient government
So,
entity?
I think you're feeding.
I'll have the libertarians listening very fired up about that suggestion.
Most likely, yeah, most likely. Here's my take, and maybe this shows a little bit too much of like my political beliefs, but I think if you don't have some level of competition in the space, you end up with stagnant, right? And you end up with really bogged down systems. And listen, I've audited government entities in the past, and we spend a lot of money as taxpayers just to audit what we do, right?
Mm-hmm.
Like for every dollar I pay in, it's not like a dollar can go to something else. It's like, well, maybe, and I don't know the number, but we'll say maybe 75 cents can actually go to spend on something, because the other of it is just for the management of it, right?
Yeah.
And if you think about like when you give to charities, it's like a lot of people hate that and they want it to be closer to like 5%, right? Because there's no zero, there's no 100% goes
everybody.
on. And if you put it in there, government, the way laws are written, the way the government agencies are set up, they just have to be overly strict in the way they do things, and they can't be dynamic, and they can't do it. So I don't think they should. I think you have to keep at least the oligarchy going on, just to have fresh ideas, fresh takes on how to do it, fresh minds on how to do it. But like you said, it's like, well, you pretty much just commoditized it. And even if they come at you with different engagement letters, like, well, we'll do 300,000, we'll do 350, we'll do 500,000. I bet at the end of the day, if you look at like actual fees that they charge after overages, it's like, yeah, you all kind of end up the same for an IPO.
Yeah, I feel like it's a race to the bottom with the pricing there.
Yeah.
And just to be clear, I'm a very pro free market capitalist. It drives innovation. It's why America's great. Like I completely agree with that. I also agree that some things should be centralized and done by the government. There's a place for both of them.
Mm-hmm.
And audit's one where I look at it's like, is innovation gonna really save this? Is there that much to go? And I could be wrong, but then I also look at like, okay, you have 4 options. It's a commodity.
Mm-hmm.
That means there are 4 management functions
Mm-hmm.
worth of expense across the same talent pool that actually does the work, right? So back to synergies and GE and all that kind of stuff. If you really thought about it more like the PCAOB doing an audit roll-up play, driving efficiency across that. And then the way I would propose it gets funded is if you're a public company, you pay in, and then it's
fair.
like, and that's how that entity is funded. I don't think it should be a taxpayer funded thing. When it's taxpayer funded, that's like, rightfully so. People should get fired up about where their dollars are going and how much it's being wasted. But if you're going to be a public company, rather than negotiate audit fees and have different fees with everybody, just like X% of your revenue goes into the pool. No further questions. That's it. And then we're going to audit you.
Yep.
And they send the team out to audit them. Like, why have the PCAOB that's going to audit the auditors? It just feels like if they're going to do a sample of the auditors and kind of do audits and tell everyone how to do it, like just do it yourself if you're so good at it.
Yeah. Well, the way I look at it though is you need.
And to be clear, I don't feel super strongly about this. It's just like
it's an interesting take.
To me, it's like the only alternative to what we have going on right now.